Hello, everybody. Well, I'm sure you've heard Palantir is up well above 20% over the past few days because the market is getting really excited about Palantir right now. But I'm here to provide you an update as to what I think on the stock because I think I have a little bit of a contrarian view on Palantir compared to most. You may know that I own Palantir mostly for the military business. I think the company is a steady Eddie stock. I think it's a very cozy, safe type of stock. I wouldn't categorize it as an hyper growth stock anymore, even though it used to be. I think this is a company that has a very, very strong positioning with the US government and could become one of the main contractors of AI to the US government. And by way of doing this, would be the fourth contractor of a military industrial complex. That's kind of my thesis for Palantir. So Palantir, for me, is probably the most value stock that I own. Out of all of the stocks I own, it's probably like the most value stock, even though to most people who hear this, they're like, what are you talking about? Palantir is not a value stock. Well, so somewhat, it's somewhat becoming like it. So let's go for the quarter. So I'm just going to compare Q4 to Q1, and Palantir is very messy. It's in its investor presentations, like they never report the same metrics. They really make it odd, I believe, but that's the trademark of this company a little bit. If you look at the CEO, you understand it's how they work. It's part of their culture, and it's fine. So let's look at the growth rate. So they decided to report year over year here, but we see that in Q4 you had 509 million year over year, and in Q1 you had 525 million year over year, which means that we still have roughly the same comps compared to Q4 of 2021 and Q1 of 2022. But, and on this channel, I've been documenting the deceleration of the growth of Palantir over the past 3 quarters. And we are still seeing that same deceleration, right? Revenue is only up 3.14% quarter over quarter. Now that is not very good. Annualize that, you're in the 15% ish growth. It's just the rate of monetary inflation. That's why I named the channel Beat the Denominator, because I want my stocks to at least beat 15% growth in revenue to even justify an investment. So that's why I said it's a very, very value stock at this point, very cozy stock. And yes, of course, we're bragging. Everybody's bragging about the fact that the GAAP net income positive again. Wall Street absolutely loves it. But me, what do I see? I see a company that has $2.9 billion in cash, a cash pile that is growing, cash that is losing value to inflation, and I see that they're not investing much in their growth. What's going on? And it's like, I'd rather see them have GAAP losses, right? Positive cash flow. Keep positive cash flow. They have They have very high positive cash flow, 180 million. So that's very high in positive cash flow. But show me some GAAP losses. Keep your positive cash flow, and invest some of your 100+ million each quarter. Invest that in a better sales team. Right? Try to go sell Foundry. Get the best sales folks you can possibly get. Etc., etc., etc. It's a complaint that I have about a lot of companies. If you remember, Palantir told us GAAP profitability was way further out in the future. To me, this is a company that is catering to the short termism of Wall Street. I was perfectly fine when I bought that stock, having them see GAAP profitability in 2025 or 2026. But anyways, that's just me. That's my style. I'm not criticizing that my style is different from most people. So let's just talk a little bit about AI, because I think much of the pop has to do that Palantir is trying to set itself up as an AI darling. That's what I call the AI rebranding. And this AI rebranding may just be what Palantir needs to attract new customers and perhaps a new shareholder base, if you really think about it. And when I compare Q4 and full year 2022 presentations and their selected slides, and I compare that to Q1 2023, the technology that they've put forward in the Q4 update is their ontology, right? Their layer of decision making, their ontology on the Foundry platform. That's what they put forward in the 2022 update. They don't mention AI a single single time. And in the Q1 update, they mention AI on every single qualitative, i.e. every single non-financial business slide, you have AI mentioned. So this is one slide, AI, 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 AI. They're best yet in AI. They have a new product in AI. They're dealing with large language models in AI. They're introducing AI platform for defense and for business. And they also were ranked really, really high in AI by Forrester. But that was prior to the rebranding. I would argue everybody knew that Palantir was an AI company. Ontology is AI. What has changed for Palantir is that now they're calling it AI because they're realizing, oh wow, we probably should call it AI. So that's a good move from a marketing standpoint. If I may make a recommendation, I mean, nobody cares, but I'll make it anyways. So they call their AI platform, the AIP AI platform. Why don't you add AI in front of ontology and call it AI ontology? Since it is what it already is. Ontology is just pure AI. It is what it already is. So, anyways, that's very interesting. This rebranding. Nonetheless, still in my view, a more value oriented growth stock. Here's another sign which for me tells me that they're trying to become more of a growth type stock. Is if you look, they have the second quarter of positive GAAP EPS, and we know that to join the S&P 500 you need 4 consecutive quarters of GAAP EPS. And so are we trying to get those 4 consecutive quarters? They have the volume, they have the market cap, right? They meet pretty much all of the requirements besides those 2 consecutive quarters. So perhaps that's what they're shooting for, really more of a value way to try to raise the value of the stock, if you ask me. But that's fine. I own this stock. I like this stock. I think it's a good company. But let me move on, right? And I'm really gonna go in a nutshell on the revenue growth. I'm all about the revenue growth on this channel. That's the main metric that I focus at because it's the metric that can't be manipulated. Revenue growth is the metric that does not lie. It never ever lies to you. Revenue growth, it's your sales, right? So, anyways, when I look at revenue growth, I'm seeing, and this was for full year 2022 compared to Q1, but Q1 year over year of 2023. So think of it as we're just forwarding the 12-month period by 1 quarter, by 3 months. That's a good way to look at it. So if you forward it, you can see that actually we're seeing an acceleration in the government business. The growth rate of a government business was a business that grew at 19%, and it's growing at 20% now. So the rate of growth, of yearly growth, the trajectory, the rate of yearly growth is shooting up. So it is accelerating. The government business is picking up steam, right? It's still growing. It was growing at 90%, now it's growing at 20%, picking up steam. And very important to note that it's still their biggest business. If you invest in Palantir, you better love the government business because that is still the major business. On the other hand, the commercial business rate of growth decelerated markedly. So it's kind of you shoot a baseball and it loses inertia. That's what it's done. It's lost inertia. It's went from 29% and roll it forward, we're getting 15%. So it's almost halved. So what this is going on is that if these growth rates continues, if these trajectories continues, this stock is going to become back a near pure play government revenue growth stock, right? It's the government business is growing faster now than the commercial business, which is what this stock has always been. This stock has always been a leader in government, and so this is where I am a contrarian on the stock. I love this stock for the government business, and I like their business because of that. Because I think the military spending is one of the last things that governments will ever cut, and in this way, this stock is what I call a swan stock, like kind of a sleep well at night type of stock. Although I do believe a lot of growth stocks fit that criteria. Don't get me wrong. I love Foundry. I believe Foundry is great, but the way that they sell Foundry is not the modern way to sell software. Today, software is sold bottoms up. You have a free version. People try the free version and then they add on and add on and add on, and they typically pay for like a professional sign up. right? They're selling it top down in an environment where people don't want to sign a check for a few $1,000,000. It's very, very hard to sell the way they're selling. Palantir is still selling commercial software the way software used to be sold in 05, 06, 07. Makes sense because they were founded in 04. So anyways, not a criticism. I'm just telling you kind of how I feel. Now let me be very positive now about the growth of Palantir, because it is true that this company has had strategic metrics that show no sign of deceleration whatsoever, contrary to the revenue. Like we saw that the revenue is way down for the commercial, but you can see that in terms of customer count, in terms of growth, in terms of billings, you can see that, well, billings a little less, but at least customer count. In terms of customer count, you can see that this company still is strategically relevant and gaining customers. It's just that these customers are not spending right now. There's long, elevated sales cycles, and they're still signing deals, although that is a little fewer deals if you analyze that compared to last year. That's actually just a tad fewer deals this quarter that they've signed. But there is a lot of optimism. It would be unfair to say that there's been a change in the acquisition of sales leads and the acquisition of customers. It's just that these customers, even though they increase in count, it does not manifest itself in revenue. And so, anyways, that's the nature of the macro right now. Just one note about the gross margin. Gross margin is flat. I mean, it's the same. It's essentially the same. There's no more, not much to comment. Now, here's another thing that I think is a little silly. In my view, it's a little silly because the headlines are like, yeah, Palantir, it's a triple beat. Well, guess what? I believe the guidance was probably just updated to make sure they get a triple beat and blow it out of the park. Right. So that's probably what they did. Because if you look at their old guidance was, 2.18 to 2.23. And now we are at 2.185 to 2.235. So they've increased the guidance by 5 million. Kind of a joke to a growth investor like me, right? I've covered a few stocks that have raised their guidance quite a bit, like HIMS, for example, recently by a meaningful amount. This is a rounding error. This was likely made for the headlines, and this is fine. This is great, but let's just know, when you hear triple beat, there's different types of triple beat. There's this type of triple beat, and there's other types of triple beat. To me, the guidance is flat. Just like I do not call going from 82% to 81% in gross margin, I call it flat. This, a 5 million increase, I'm going to call flat as well. But in the headlines, it looks different. Anyways, you have to be consistent with yourself. And I'll conclude with this. And this was the theme of my video, is really, could the stock be seen as a value stock? Because from a growth standpoint, to answer the question in the thumbnail, was Q1 really that good? From a growth standpoint, it really wasn't that good. I mean, if you're a growth investor, there's no change. Like this is a cozy, sleep well at night business that's growing at just about, the government's growing faster than the commercial business. Read all me this. Try to understand the government with the slowness that it is to make those deals with the government. It's growing faster than the commercial business. So anyways, but could it be seen as a value stock? And again, this to a lot of investors, I believe, could be very, very appealing. For example, they're clearly becoming a cash fortress. They're more anti-fragile than ever, right? More than ever. Like I said, I have a large position. I'm sleep well at night. But to me, nearly $3 billion in cash at this point is silly. It is a little silly, especially when it's losing purchasing power this fast, right? Okay, so they sold 50 million. Their 50 million bucks in gold that they had bought 2 years ago. They sold it. They sold it at the top. Good job. It's great. But please reinvest that cash in the business. Do something to grow faster. At least your commercial business. Do something to grow faster. Maybe it's unique, wonderful R&D. It's a feature that people are gonna absolutely want, and do nothing else, right? Than want it. Or maybe it's a better sales team. But do something or give discounts. There's something you can do to raise those commercial sales. Clearly, the government business is doing well. But if they don't do anything, I could see how Palantir may become appealing to a value investor, or I'm going to call it a hybrid value growth investor, because if you look at the free cash flow yield, for example, so enterprise value is roughly, this is back of a napkin math here, huh? But 21 billion minus 3 billion equals 18 billion in enterprise value, right? You take the cash out, you favor them because of the cash. The annualized free cash flow, which they reported, if you analyze the number they reported, that'd be 786 million. So you're at an enterprise value of EV over FCF, or free cash flow, of 24, which in the absolute term for a company that's not growing, that wouldn't be too exciting, but that's actually pretty cheap, even very cheap for a business that is still growing way faster than the rate of the economy. Going forward, and 16% growth going forward. It's faster than the rate of the economy, right? So it's still appealing, but it's not fast enough for a revenue growth snob like myself, because I look for 30%. If you know, on the channel, I only focus on I cover stocks that grow at least at 30%. That's my criteria for inclusion. When they don't reach that, I tend to drop those stocks. And yeah, that's about all I have to say. So in conclusion, Palantir is doing fine. The quarter is not as great as the price jump implies, but it's doing fine. It's the quarter is as expected. To me, this is just the valuation resetting itself, the shareholder base changing a little bit. There's a lot of excitement around around the AI app as well, AI hype as well. But to me, there's been nothing material to the upside or to the downside of the business. It's still the same old business, and of course, I plan to hold it for a very long time, because my bet is the military side of the business, and I don't see any headwinds. I only see acceleration in the Gotham side of the business. So for me, not adding, not selling. We'll check it again in 3 months, and check Twitter here and there to hear about the stock price once in a while. But yeah, it's a sleep well at night stock. I'm not doing anything. Anyways, thank you very much for watching. This was not investment advice, entertainment only. I appreciate all of your likes, all of your subscribes. I hope I didn't make anyone mad by telling my thoughts about Palantir. I know Palantir is heavily followed, but it's a good stock in my view. No investment advice. Thank you. Have a great day.